Hello guys, Brian here from quantlabs.net. So today I want to show you a article I saw from a little while ago. You can see here, found on futures.io from Big Mike, the system administrator. What I want to show you is how to figure out your daily targets. And it's dynamically calculated, not meaning you just pull out of your yin yang and be comfortable with these are mathematically generated. So this is specific to the digital currency space, but it can be probably applied to other asset classes, but it just depends upon what metrics you have available in that asset class. I find the asset class I focus on is a lot more transparent in terms of data. So let me just show you this. So this is the way to do it. This is using hard dollars. This is not using percentage. So depending upon the account of your size, this is what I've come up with. So these are your inputs and what you want your daily profit to be. So let's say 500 bucks, 250 bucks. And then what we want to do is we want to get today's profit level and yesterday's profit level. So if you're part of my elite program, I'll show you there's a way to calculate that using the exchange that I use. So if the current date is not equal to the previous day, then yesterday's net profit is equal to today's net profit. Now, if the market position is equal to 0, then calculate the today's net is minus the net profit minus yesterday's net. And this is the condition. So you have set your daily loss limit and your upper daily profit. So if you run this, you set a condition flag. So if your price of your today's net profit, so if your daily loss is more or greater or in losses than today's net, or today's net profit is less than daily profit, trade. Okay, so that's basically how it works. So hopefully you can make sense of that. So I've been posting a variety of articles today on this. So today's the 24th of July, just so you know, if you go to my blog. So just see where I start here first. So this is the first article. So if you're on the podcast, you're looking for a track daily trading P&L target on hard dollar versus percentage. So again, this is using hard dollar amounts. So this is where you can find the article. I'm just showing you the posting from Big Mike at futures.io. And then you can then do a variety of calculations. So in my case, this is a typical daily chart or daily spreadsheet that I have my system or bot calculate every day. It's been doing it for the last 20 days. And this is using real market data. With the date, time, the symbol, that doesn't really matter. The entry, exit. So these are the prices of the entry and exit in US dollar on the exchange that we use out of California. Calculate the P&L between the two. So obviously you want the exit to be higher than the entry. So we can calculate an ROI based upon the P&L against the entry price. So of course we factor in commission for that as well. And then there's a couple other metrics that we can use. So I like to track what's the weighted average of the digital asset class of the top 13 biggest movers or top 13 largest coins based upon volume. Then we also have the running total of the daily ROI based on each of these. So this is the running total. So we're able to get a metric if it's going to be running at negative 2.4 or positive 1.3%. And it's all based around percentage. So that's the average, or this is the typical spreadsheet that I use. So out of that, I've calculated basically for each day, remember this is for 20 days or 20 days of trading, so-called mock trading. But this is what I was able to figure out. So let me just go over the first one. So this is another posting. It's called 20 days worth of crypto trading, average daily ROI and trading performance. So basically I've got each day right here, spreadsheet, and in there I have the last row. So basically this right here for each day of trading. Okay. So this is what I'm after. What's the total running P&L ROI for the day? So how much did it trade? Negative, positive, doesn't matter. But I want to be able to show that here. No, sorry. Yeah, I think it's this one right here. This one right here. So out of that, we can calculate that. So we have the total ROI for the day. And then we have ROI max. That's the maximum for the day of total ROI. Then we also track the mean of the day of the total ROI. Then we have the number of trades that were traded. And then we also want to track weighted moving average mean, as well as the peak of the weighted average. From there, we can also want to make sure we track the weighted moving average minimum as well. So you do that for each day, okay? And then hopefully at the bottom here, and this is all done in Python. So we now have this calculation for each day, okay? And we can go through the metrics and look for patterns, okay? So if we have certain days of, let's say, 29%, for that day we have the maximum that ROI hit for the day, running total, was 30%. The average of it was 14.48%. Total number of trades was 741. And then for each position, we're able to calculate the weighted moving average mean, the weighted average max, and on top of the minimum. So we can calculate that. So in another posting, what I did was, what I want to show here, it's really important to know this. This article is called "Look at How Negative Daily Averages Have Been for Cryptocurrency." So when you look at this table, and again, this is generated from this Python script, we're able to generate the day, okay, the weighted average moving mean for the day, okay. Then we have the total ROI mean as well, and the number of trades. So when you look at that, let me just see if I have it. So this is a cleaner version of it. So you can see here, when I started this on, well, whatever, but usually what you'll see here, if I sorted this out, you can clearly see patterns where you'll get a couple of days of negative mean of the ROI, okay, for quite a while, and then you get a big profitable day, okay. But you're able to see kind of, and maybe able to predict or find a pattern of the weighted total average mean, okay. And you can use that to sort of set your overall trading performance. So when I calculated all of these, this is the average of all of these averages, okay, over 20 days. So what I calculated was the average weighted average mean over the 20 days in all the positions, the average weighted average is 1.5. So that's fairly strong. The total ROI, now remember, this is on very strong days where I was able to get performance of 29%, 14%, 15%, but there's a lot of other days where there was some negative days as well. Only one day where it was really extremely negative. So then on top of that, we're able to calculate what's the total mean of the daily total running ROI. So it's this 1.16. So that's the overall performance every day. Using a mean of the 20 days, that's the average mean you would get or average or 20 days on the ROI, including the extreme at both ends of the performance. If it's negative 10 all the way up to positive 29% for the day. Then what we wanted to know is what's the average number of trades, right? So that's important as well. So then we're able to calculate not only that, but it's very important to know what's the total average per move of if you're calculating basically this, okay? You have your exit entry, your P&L, and then this ROI for each position, So you want to calculate what's the average ROI move for each entry out of all the trades. This is what I came up with, or this is what calculates. So it's negative 0.06. So I thought, okay, I'll make that positive. So that's the average rate of return you would get on each position, but I made it positive, okay? So what I did was I then calculated the profit of, see if I have it here. Okay, so this is what I want to show here is should the average daily target using that Big Mike's similar code to Python, should it be $90 per trade based on these calculations? So based upon what I've shown you, based upon the links that I have, okay? So I figure if I want to allocate $15 per trade, I do that. That's a minimum test. And then calculate based upon this average right here, just to average it down and make it easy, but I could be really precise if I want. So if I'm averaging 200 trades per day, okay, and each trade on average gives me 6% per trade on average, which is the absolute of this, 6.3. So then from there, I'm able to generate, when I multiply all this together, it's $180 on average expected of trading in dollar amounts of 180 per day. So then I thought, every time I see something that's calculated, most professional traders will divide that in half. So if I take the 180 divided by 2, and if I'm averaging 200 trades per day, is it safe to say I could set that target, hard dollar target of $90? So just wanted to put that out there. And obviously you can use this logic to have this daily target be dynamic based upon the logic I'm applying here. So I just wanted to put that out there. I think this is a safe way to limit your trading and then scale this $90 per day based upon the confidence that it actually works. So if I'm able to put $90 per trade or for the day on $15 at risk, that's pretty conservative. But then I could say, okay, I have a $2,500 account in the exchange out of California as a balance, 2,500 US. I could say, okay, what am I going to use to be able to ensure I maximize that profit? So then that comes back to, let me see here, the Kelly Criterion. I haven't really talked about this much, but there's an article here that did this exact same formula towards data science, this one here. So this article you want to look for on my blog is called Kelly Criterion, Help Maximize Cryptocurrency, Algo Trading, and Finance. Okay? So if you use that, this article here, if I was to pull it up, let's see if I can pull it up. There's an interesting stat here that was quite interesting. Let's try this. Okay. anyways, let me just pause this again. So again, here is the article on towardsdatascience.com. The article is called Python Risk Management Kelly Criterion. So one thing I wanted to mention is to help maximize your profit is a chart right here. So based upon your position sizing, if you have, let's say in my case, a $2,500 account, what is the average percentage of each position size are you willing, or percent of each position size against your trading account? So here, if you put in 0.01, like 1% or 5%, 25% or half, or so let me start again, 50%, 25%, or 5% or 1% of each position against each trade against your total account, you'll see here that if you put in 25% of your account that you're willing to risk against, let's say 2,500, you can expect to get maximum return. So here you can use this Kelly Criterion to help maximize profit based upon your position sizing against your total account. So with that in mind, obviously this can be all dynamically allocated based upon your risk and your tolerance for risk, as well as how much you're willing, based upon your trading performance for the day. So just want to put those out there because these are really important, but they're also important if you can have them trade in an automated way, dynamically, 24/7, 7 days a week. So just putting that out there. I'm going to do a webinar topic on this on, I believe, the 26th on Monday. We shall talk to you later.